First up, the currency. Now the currency has lost around 2% against the dollar in the month of June. The falling currency has been playing havoc for importers in particular, and of course exporters are only rejoicing. Abhishek Goenka, founder and CEO of India Forex Advisors, now joins. And Abhishek, it's great to have you in the studios, and thanks for being here with us. So first of all, before we talk about the impact and who's benefiting and who's losing, let's get your stance. Do you think the recent low that we've seen around, just a little above 59, is that a short-term low in place?
Yeah, looks like the short-term low is already there in place. In fact, last 3-4 days when the rupee hit 59, the other emerging markets also, which was getting weak very, very strongly, they also started correcting. And in the news, of course, there have been talks that RBI was there at 59, but then technically also we saw certain patterns which were extremely strong, and they were telling that 59 could be a technical top, but that doesn't mean on a medium term the rupee cannot make a new low.
Now, if you talk about the immediate fallout of this, one of course is importers. They definitely have a lot of their plans going haywire. The other is companies with a lot of high external debt. They've raised money overseas. So tell us, if something immediately comes to your mind, what are we talking about in terms of corporate implications of the currency at 59?
See, of course, there is no free lunch in the market, and of course if you are getting something cheap, you need to start worrying. Now, time and again, as a research company, we have always been talking about that the importers or any kind of a company per se, whoever is taking a long-term debt or a short-term debt should actually go and pay for the hedging cost and start covering. But since hedging is always very expensive and the premiums have been very high, nobody wants to actually go and hedge. So the point is that hedging still remains to be a good option, and any dip we get in the market close to 55, 56, I think companies should still go in and hedge in the market, because longer term we still feel that the US dollar is going to be very strong. The LIBOR is expected to shoot up, and probably the 10-year yields, which is currently at 2.2 from 1.4 levels, is likely to go to 3% or maybe more. So if people are having ECBs of 3 years, 5 years, 7 years, then definitely they should be looking at hedging, because your entire project goes for a toss, and probably the numbers start showing in your balance sheets.
Well, you mentioned 55, 56. You don't expect the rupee to appreciate meaningfully above that level?
We personally as a company don't feel that rupee should go below 55. But over the next 6 months, probably there could be times when we see dollar weakness coming in. It always happens. And then probably we could see a dip close to 55, 56, but then that will not stay for long. And then whenever we get this dip, we need to act very, very fast and start covering our positions.
Sure. So let's talk a little bit about corporate hedging. What are the reasons you think that people are really still, particularly smaller companies, are shying away from taking this sort of risk cover?
See, it's very simple. The entire market sentiment and the market style has changed over the last 2-3 years. When you start printing money and you start getting the money cheap, then obviously the mindset of the company start becoming that anyways they're going to earn 5% from the premiums if they do not hedge. Now, that started happening in the last 2-3 years, but since when the dollar has started getting stronger, now these companies start thinking that, okay, now how much will the dollar get stronger? Can it go stronger more than 5% in a year? If yes, they would look at covering. If they're saying that, okay, 5-6%, anyways the dollar is going to get stronger, so let's take a call, let's take a risk and not hedge. And especially this is happening in the trading community. The trading community mindset has turned like that. The trading company doesn't want to hedge. They say that the business has become like that they're doing business in 2-3% margin, and they're transferring the entire benefits to the buyer.
So it seems lessons have really not been learned. We talk about the entire FCCB crisis that played out back in 2008-9 when the bubble burst and the kind of litigation that ensued. But from what you're telling me, it doesn't seem that much has changed on ground.
See, it's actually kind of a vicious circle. You're already trapped. Now you feel that if you start drowning, whether you're 100 meters or 500 meters doesn't make sense. It doesn't make a difference at all. So it's a case like that where companies are already into debt. They're huge mark-to-market losses. They are saying, okay, we are anyways drowning, so let's take a call and let's take a hit. That is, rupee comes to 53, 54, then probably we'll hedge. But the point is, when it comes to 54, nobody wants to hedge, because we all hope against hope that the rupee is going to keeps getting stronger, or let's wait and watch.
Okay, fair enough. Now, how do you see the scenario playing out over the next couple of weeks, let's say, do you expect some stability to come into the currency markets? What's the call as we're looking at international forex movement and, of course, the domestic cues back here?
I think last time we discussed at 58.5, we're talking about 57.5. Now I think the market is more like in a range between 57 to 58 for some time, like, because you have the policy coming in, the Fed policy and of course the RBI policy. So we saw some technical supports at 57.5 levels. So we also did some buying, but the point is, I think it's going to stay for this for some time because there's too much of bloodbath that's happened. But then overall, let's take a fresh view when the market is close to 58 plus or 57, then I think there'll be a better view coming in. But overall, I think the rupee is still weak. We might get some dips in between, but then those dips should be taken for importers to start covering positions. And exporters, as we all say, are not very uncomfortable, and unless they have booked a lot in the lower levels.
And if you've got payments coming up, foreign currency payments coming up in the next couple of months, better go out and hedge whatever you can because you don't see any meaningful strength returning to the currency.
Not at all. And I always say that any kind of a dollar debt should not be kept open. Whenever there is a next best alternative, which is rupee debt, which is giving you 2-3% higher cost, it is always making more sense to take into US dollars, cover your debt by paying premiums and sleep tight. That's the way going forward.
All right, Abhishek, good talking to you this morning. Thanks for taking out the time and being with us. Well, that's a view on the currency and the issues at stake when it comes to corporate India. Time now for a quick check on how the markets are doing. Priyank is joining in. Priyank.
Well, let's East West markets have been shaping up with the